Okay, this is module 13 for Introduction to Business. These are the key terms. We are going to read them and then say them, read them, and then say them again. This is for on the go if you need audio education on the go. This is a long list. I'm out of town traveling, so we're doing it a little bit different. I'm doing it a little bit different than I normally do, so let's go. Accounts payable. Purchases for which a buyer has not yet paid the seller. Buyer has not yet paid the seller. Accounts payable. Accounts receivable. Sales for which a firm has not yet been paid. Sales for which a firm has not been paid. Accounts receivable. Bank charter. An operating license issued to a bank by the federal government or a state government required for a commercial bank to do business. Bank charter. Bond ratings. A letter grades assigned to bond issues to indicate their quality or level of risk assigned by rating agencies such as Moody's, Standard & Poor's, S&P. So letter grades assigned to institutions indicating their quality and level of risk. Bond ratings. Bond. Long-term debt obligations, liabilities. Debt obligations are liabilities issued by corporations and governments, are bonds. Broker markets. National and regional security exchanges that bring buyers and sellers together through brokers on a centralized trading floor. Broker markets. Capital budgeting. The process of analyzing long-term projects and selecting those that offer the best returns while maximizing the firm's value. Capital budgeting. Process of analyzing long-term projects and selecting those that offer the best returns while maximizing firm's value. Capital budgeting. Capital expenditures are investments in long-lived assets such as land, buildings, machinery, equipment, information services that are expected to provide benefits over a period longer than 1 year. Longer than 1 year, capital expenditures. Cash flows, the inflow and outflow of cash of a firm. Cash management, the process of making sure that a firm has enough cash on hand to pay bills as they come due and meet unexpected expenses. Cash management. Circuit breakers. Corrective measures that under certain conditions stop trading in a securities markets for a short cooling off period to limit the amount of market can drop in 1 day. Circuit breakers. Commercial banks. Profit-oriented financial institutions that accept deposits, make business and consumer loans, invest in government and corporate securities, and provide other financial services. Commercial paper. Unsecured short-term debt, an IOU, issued by a financially strong corporation. Commercial paper. Common stock, a security that represents an ownership interest in a corporation. Common stock. Credit union, non-for-profit, member-owned financial cooperatives. Credit union. Currency, cash held in the form of coins and paper money. Dealer markets, securities markets where buy and sell orders are exchanged or executed through dealers or market makers linked by telecommunication networks. I'm going to turn my do not disturb on. Hold on. Okay. Oops. Okay. Currency, paper and coin money. Dealer markets. Securities markets where buy and sell orders are executed through dealers or market makers linked by telecommunication networks. Demand deposits. Money kept in checking accounts that can be withdrawn by depositors on demand. Demand deposits. Dividends. Dividends are payments to stockholders from corporation profits. Discount rate. The interest rate that the Federal Reserve charges its member banks, the discount rate. Electronic communications networks, ECNs, are private trading networks that allow institutional traders and some individuals to make direct transactions in a fourth market, ECNs. Exchange traded funds, ETFs. This is a very popular option for a lot of people. A security similar to a mutual fund, holds a broad basket of stocks with a common theme, but trades on a stock exchange so that its price changes throughout the day, are ETFs. Factoring, a form of short-term financing in which a firm sells its accounts receivables outright at a discount to a factor. Factoring, a form of short-term financing, so you can sell your accounts receivables outright to a discount factor. Let's recap what accounts receivables are. Sales for which a firm has not yet been paid. Okay, so as money comes into your firm, if you sell your accounts receivable, as money comes into your firm, the person who buys, your factor that buys your accounts receivable will receive that money. But you sell it at a discount so that you can get some cash flow. It's short term. It's not meant to sustain you for financing. It's not a sustainable financing option. It's for short-term financing. Moving on, Federal Deposit Insurance Corporation, FDIC. Everybody knows what FDIC is. It's on most of your banks. An independent, quasi-public corporation backed by the full faith and credit of the U.S. government that insures deposits in commercial banks and thrift institutions for up to a ceiling of $250,000 per account. Per account. Not combined, per account. Federal Reserve System, the Fed. The Central Bank of the United States consists of 12 district banks, each located in major U.S. cities. So there's only 12 district banks for the Fed. And if you're following legislation, July 1st or 31st, we are switching to FedNow. It's a centralized bank for the Fed. It's taking it away from the private banks. Financial intermediation, the process in which financial institutions act as intermediaries between suppliers and demanders of funds. Financial intermediary. Financial management, the art and science of managing a firm's money so that it can meet its goals. It's an art, it's a science. There's some finesse to managing money to meet those goals. Financial risk, the chance that a firm will be unable to make scheduled interest and principal payments on its debts. Financial risk. Futures contracts, legally binding obligations to buy or sell specified quantities of commodities or financial instruments at an agreed upon price at a future date. That's a contract. Sounds pretty strict. Insider trading, the use of information that is not available to the general public to make profits on securities and transactions. Insider trading, that's a no-no. Institutional investors, investment professionals who are paid to manage other people's money. Institutional investors. Interest, it's a fixed amount of money paid by an issuer of a bond to the bondholder on a regular schedule, typically every 6 months, stated as the coupon rate. Investment bankers, a firm that acts as an intermediary, buying and selling securities from corporations and governments and reselling them to the public. Investment bankers. Line of credit, an agreement between a bank and a business that specifies the maximum amount of unsecured short-term borrowing the bank will allow the firm over a given period, typically 1 year. Typically 1 year is a line of credit for a business. M1, the total amount of readily available money in the system, including currency and demand deposits. M1. M2, a term used by economists to describe the U.S. monetary supply, includes all M1 monies plus time deposits and other money that is not immediately accessible. Marketable securities, short-term investments that are easily converted into cash. Marketable securities, short-term, easily converted to cash. Money, anything that is accepted as payment for goods and services. Money, typically coins and paper. Come on, guys. So, mortgage loan, a long-term loan made against real estate as collateral. So you don't pay your mortgage, they'll take your house. municipal bonds. Bonds issued by states, cities, counties, and other state and local government agencies. Mutual fund. A financial service company that pools investors' funds to buy a selection of securities that meet its stated investment goals. National Association of Securities Dealers Automated Quotation System. This is the NASDAQ. If you never knew what that stands for, that's why there's a lot of letters, a whole lot of words. NASDAQ. The first and the largest electronic stock market, which is a sophisticated telecommunication network that links dealers throughout the entire United States within the U.S. borders. Open market operations. The purchase or sale of U.S. government bonds by Federal Reserve to stimulate or slow down the economy. Open market operations. They're constantly tweaking this to make sure that we stay on track and don't fall into a recession. Options. Options are fun. Contracts that entitle holders to buy and sell specific quantities of common stock or other financial instruments at a set price during a specified time. So you set up an option to where if Google drops below $91.15, that you'll buy 10 stock today or this specific day. Over-the-counter market, OTC markets are markets other than the exchanges on which small companies trade, including over-the-counter bulletin board and the pink sheets. Pink sheets are like penny stocks. Pension funds, large pools of money set aside by corporations, unions, and governments for later use in paying retirement benefits to their employees or members. Pension funds, preferred stock, an equity security for which the dividend amount is set at the time the stock is issued, and the dividend must be paid before the company can pay dividends to the common stockholders. Preferred stock, an equity security for which the dividend amount is set at the time the stock is issued, and the dividend must be paid before the company can pay dividends to the common stock holders. So if you get preferred stock, you're going to get paid first at a specific rate. Primary market. The securities market where new securities are sold to the public. So when you have an IPO, I think is what it's called, it goes on the primary market. So initial stock offering, your ISO, is going to go on your primary market. ISO, not IPO. All right, that's your primary market. Principal, the amount borrowed by the issuer of a bond, also called par value. Principal. Reserve requirement, requires banks that are members of the Fed to hold some of their deposits in cash in their vaults or in an account at a district bank. Reserve requirement. Retained earnings, profits that have been reinvested into a firm. Retained earnings. Return, the opportunity for profit. Return, it's your opportunity for profit. What's your return on investment? Your opportunity for profit. Revolving credit agreement, a guaranteed line of credit whereby a bank agrees that a certain amount of funds will be available for a business to borrow over a given period, typically 2 to 5 years. Revolving credit agreement. So revolving is the key word there. That's going to put you over that 1 year mark, usually 2 to 5 years. Risk, the potential for a loss or the chance that an investment will not achieve the expected level of return. Risk. Risk-return trade-off. It's a basic principle in finance that holds that the higher the risk, the greater the return that is required. Secondary market. Securities market where old, already issued securities are bought and sold or traded among investors, including broker markets, dealer markets, the over-the-counter market, and the commodities exchanges. That is the secondary market. Securities. Investment certificates issued by corporations or governments that represent either equity or debt. Securities. Investment certificates issued by corporations or governments that represent either equity or debt securities. Selective credit controls. The power of the Fed to control consumer credit rules and margin requirements. The power of the Fed to control consumer credit rules and margin requirements. Selective credit controls. Stockbroker is a person licensed to buy and sell securities on behalf of clients. Stock dividends. Payments to stockholders in the form of more stock may replace or supplement cash dividends, stock dividends. So instead of getting cash for the profits of the company, they'll give you more stock in the company. Term loan, a business loan with a maturity of more than 1 year that can be unsecured or secured. So term loan, it's another loan product. Thrift institutions, also covered by the FDIC in earlier key terms. So thrift institution is a depository institution formed specifically to encourage household saving and to make mortgage home loans. Thrift institution. Time deposits. Deposits at a bank or other financial institutions that pay interest but cannot be withdrawn on demand. Okay, so you put your money in, you can't just take it out when you want to. It's a time deposit. Trade credit. The extension of credit by the seller to the buyer between the time the buyer receives the goods or services and when it pays for them. Trade credit. Underwriting. The process of buying securities from corporations and governments and reselling them to the public, the main activity of investment bankers. Underwriting. I love that. Okay, unsecured loans. Last one. Loan for which the borrower does not have to pledge specific assets of security. That's an unsecured loan. All right, that was Module 13 for EM Hen, Introduction to Business, coming live to you from Atlanta.